5-point stops here with the stuffs here. Be careful and make sure you keep your stop. Like we had the backup there at the and at the 61 our settlement price. So hopefully you guys scaled in there and having a nice rotation here against that 63 area. All right. Pivot this morning was 36.73. Support down here at 63, 52, 40, 32, and 23. Resistance on the upside at 81, 90, 37.01, 12, and 25. All right, the market here again, a very, very nervous little market trying to figure out what to do. Obviously, it knows what to do. It's going down, but how far, how long, how, they keep having these days will be down to zero soon. I know it's not a joke. I shouldn't be joking about that, but yeah, it is what it is. All right. Again, welcome some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur once the market paints some bars. And again, with the volatility that's in the market, it's moving around a lot. Trade somewhat, you don't have to trade much or a lot. Just make sure you keep your stops in place and wait for opportunities to present themselves. Again, the back up there at 61 worked initially. If you took that, you got a nice rotation up to the 66 area. Hopefully some of you got out there. And now we continue to downtick here, coming down to the next level of support here is down at the 52 area. Again, market reacting before the market opened up to the Bank of England's intervention with a little quantitative easing with buying bonds. And now we quickly come down here to the 52 area. Again, whatever you do, keep your stops in place. As you can imagine, we're very whippy here. All right, nice quick rotation there against our 52. You got to, we're scaling in, so we didn't get down to 52. We got down to 52 and change. Hopefully, you're able to scale in there and make a nice little quick. If you got in there 53, hopefully, it's the least you should get in, at least do it the way we're trading. Sometimes some of you are doing 2 points above and below only because of the volatility. But hopefully you got in there against our 52 area and a nice quick rotation here off of that 52 area. Again, we're trading really quick here this morning. Sometimes we get a lot of opportunities like we're doing today with the volatility. Sometimes we have to sit on our hands a little bit. But right now, obviously, we're getting some movement because of the market volatility. The inherent optimism of the U.S. markets is evident as the Bank of England's intervention is seen as pointing to a more dovish Federal Reserve. Come on now, let's get crazy. But to that end, the 2-year notes, and look at the bond market here. We're showing the 30-year action, but the 2-year notes were up at 4.3, got down to 4.15. So obviously there was some good reaction here. Again, if you did get in there against our 52 area, you're getting a nice quick rotation here off of that. This is a way to take more than your stops, whatever your stop mark is, 4 or 5 points. This is an opportunity here to take a little bit more than 4 or 5 points on any of these entry points that you made. Again, we don't know when a level is going to work well or not. All we can do is trade the market. We have our levels. We hopefully believe in our levels. And if you've been with us a bit, hopefully you can believe in our levels as well and then trade them accordingly. Obviously, not all of them are going to work, especially with this volatility that is inherent in the market. So we have to keep your stops in place and then look for the next opportunity.
Hey, Saul.
Hey.
Lloyd asked a question yesterday about not taking some levels and taking the other levels. You might want to explain that to him a little better than I did.
Okay. So
The reason he asked that, he got run over. I don't know if he got run over. He saw one coming down and he didn't take it because he figured that wasn't a good level or something like that. But
right. Yeah, I mean, look, we don't know. Honestly, there's a reason we're taking the levels. Let's put it this way: we're not taking levels or not taking trades, whether they be levels or price action opportunities, because we feel that it's a good place to jump in. There are reasons why we are entering trades, and consequently, sometimes those reasons, the fundamentals in the market overtake the technicals, and kind of run us over. We're considering we are looking at the technical aspect of trading. That's what we're focused in on, and we know in the past that these levels or these setups have worked for us. And are they going to work every time? Absolutely not. Do we know which ones? Look, if I knew which ones were not going to work, right, I would not be in this. I would not be sitting here. I'd be done already. I'd be retired. This is trading, well, commodity trading. There's inherent risk here in everything that we do, and or you do. But what keeps us in the game is our stops. And you have to look. I've learned over the years that you have to get out of those bad trades and then look for the next opportunity. You can't. Sit there and try to squeeze something because hopefully it comes back for you. But the point, as far as levels are concerned, or any setups that you see that worked for you in the past that you see work for you, you should take. Um, you have to understand why they're there, and if you understand why they're there, and you understand why they've worked in the previous to the entry point, then you should have confidence in the fact that you're going to take that level. We're not giving levels here because we feel the market should stop. There's a reason that we have these opportunities levels and these setups and the price action opportunities that are occurring. Sometimes, look, just because we're giving you levels here and we're trading, um, we're trading against the grain, so to speak, doesn't mean that sometimes we're not going to find price action opportunities where we are going to, take a momentum trade. We have to let the market set us up for those momentum trades so that we can have those opportunities. But we also wait for the market to set us up for those opportunities. We're not just like jumping in here because we see the market going one way and we feel we have to jump in. So, got you there, Lloyd. Just wanted to, obviously, uh, Don, I'm sure gave you a legitimate answer to the question, and I just wanted me to reiterate maybe. But good. And look, if you made your goal for the day, you don't have to take every level. Once we you made our goal for the day, then we have a couple of people who definitely make their goals and call it quits because they're done. Because this is this business can you could have I've trust me, I've been around where every time I think I figured this market out or figure whatever trade out, it just slaps me back in the face and puts me back in my place. Because every time I think I got it all, I know what's going on, and I have a good streak, and then all of a sudden it says, "No, you don't." Happens. That's just the beauty of the game. I don't know. Is that a beautiful part of it? Who knows? But it is what it is. All right, we can see volatility here is still there. And again, the 63 level, depending on your backup on how you got in, hopefully you were able to stay with that trade. You only got up to 66, 67 there, and you kind of stayed there for a bit. And remember, the first couple of bars actually can be very, very volatile. So, you have to kind of, do you have to stay with the trade? Do you have to wait for your stop? You don't have to, if you see the price action, you're not getting your 4 or 5 points, then just exit this trade, take a little bit of profit. And then even if it, goes your way and get your stop or whatever your goals are, there's always another trade. So you got out of that one and then look for the 52 area, and the 52 area worked phenomenally well. So that was a nice little entry point against that level. And now we're just kind of coming back in here. A little bit of pressure. Look, I told you that the market is reacted, especially the bond market reacted to what the Bank of England did. And between quantitative easing, quantitative tightening, and now they don't know what they're doing. So the market is kind of grasping at any kind of bullish sign to get a little bit of a rally. Obviously, these rallies are short-lived, as the market here is definitely reacting to this environment of higher interest rates, the bond market especially. I mean, we showed you what the bond market was. Do you think bond market's not a little bit oversold here? Extremely, but by the same token, doesn't matter if it's oversold. It'll keep going down. There's always those. Traders are always looking at the market that there's one index there that's like always like shows you the market's overbought and oversold. I forgot which one it was, and it could be like at 10 right now or at 5, and it should be like in the 30s or 40s, and it's not. And people will be buying this stuff and getting rolled over on it because it's just not giving you the reaction you're looking for, but it is what it is. So we just trade the market every day. Try not to come in here with an opinion. We've talked about having opinions here over and over again. So let's stay away from opinions. They don't bode too well for us, for traders in general, not just for us. It seems like we always trade that opinion more than anything else. Let's see here. What else is coming out this morning? If there's anything coming out besides what the Bank of England did. There is pending home sales coming out here at 9 o'clock, and then Powell is talking at 9:15. Great. And another Fed speak at 10, and another Fed speak at 1. So we did have retail inventories come out this morning, wholesale inventories. So a couple of those came out as the market rotates back up here. Got a little resistance up around the 81 area. But we do have, let's see, we have pending home sales, which I think yesterday they had existing home sales come out, which blew away the number. I mean, just completely blew away the number, what they were expecting. It's, kind of goofy. 30-year mortgages are at 6.5%, 7%. What we were talking a couple months ago at 4, 3. So that's a drastic bond market move. Just amazing, right? You can see here we were down at the 124 handle, 123 handle this morning, and now we're back up here at the 126 handle into the 30-year, which is a huge move. This is the kind of moves that you get with trading electronically here. 10-year is right around 4%. So we are 50 basis points away or so in the 30-year, so we're around 3.5. And like I told you earlier, just a little bit ago, that the twos are trading at around 4.14. So it's just everything's upside down, literally, literally upside down. All right, so we are trading here, coming back into this range, middle of the range that we created this morning. But we do have a number coming out here at 9 o'clock at the top of the hour. We also have Powell going to be talking at what is it, at 9:15. Another Fed speak at 9:10, and then another Fed speak at 10, and then another Fed speak at 1. So these guys they've given the green light for them to keep talking. So again, when they're talking, you have to remember they see what's going on in the markets. They're trying to maybe say something that'll calm the volatility, or not. They could just say, hey, we are just going to go nuts tightening, and I don't care what you say. I don't care what the market says. That's a possibility. So we'll see what happens. All right, we're just kind of again trading in the middle of the range that we created this morning. So we'll see where the market takes us. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. We do have a few numbers coming out this morning. Don, thanks again for helping me out yesterday and the day before. I appreciate it. And we'll see what happens here with this market doing its thing. Let's say, in case investors did not get the message, the Fed put has officially been retired as Jeremy Powell looks to set a vanquishing soaring and looks set on vanquishing soaring inflation, entrenched expectations, economic growth, and hopes of a soft landing have been thrown into the backseat, with some arguing maybe a bit too strongly. The crew at the central bank has even promised more rate hikes in November and December after accelerating the unwinding of its balance sheet this month. And there are fears that the real effects could soon start rippling through the economy. The latest is the 10-year Treasury climbed over 4% overnight. The last time that happened was in 2008 at the height of the global financial crisis. It even is more astonishing when considering the pace of the yield ascent, with the benchmark sitting at only 1.5% at the beginning of the year. Yeah, I mean that is the amazing part about this whole thing, is how how quickly it's moved. But then again, they're moving quickly too. So again, we got resistance up here at 81. But remember, in about 10 minutes or so, we have Powell talking. So keep that in mind. But we are moving around very fast. So, and whatever you do, keep your stops in place. Okay. All right. Whatever you do. All right. Bond yields gravitating toward or above 4% means markets are pricing in tighter policies for a longer term, said some analysts. In my opinion, it is a realization that bond yields are highly unlikely to revert to lower range in the medium to longer term, given higher inflation and tighter policy for longer than that's having an impact. Oh, really? These guys just figured that out. The Dow slipped further into bear market. The S&P fell to the lowest level in almost 2 years on Tuesday, while the Nasdaq Composite inched higher, but is still nearly 32% year to date. But is off nearly 32% year to yeah. So, meanwhile, home prices were shown to have fallen for the first time in a decade as demand gets dented amid soaring rates. Wow, that's interesting. And another indicator of the times, reports now suggest that Apple is pulling plans to boost production despite rising projections as it heads into September launch event for its iPhone 14. All right, we are slowly upticking here. We're looking at the 81 area. Again, whatever you do, keep your stops in place and trade the market accordingly, looking for opportunities to scalp here. We're looking, again, probably about 4 or 5 points with this volatility. Again, we are just trading the market, whatever the market gives us or doesn't. Doesn't really matter. We just trade whatever it's there and then go from there. Okay. Bond turmoil in the UK has forced the Bank of England to step into the market as government borrowing costs surge amid fears of government tax cutting plans. The central bank will soon suspend the planned starting of the gilt selling next week and the temporary buying of long-term bonds, scooping up whatever scale is necessary to yield on a 10-year gilt tumbled in response 36 basis points to 415. Well, we'll see what happens. Again, we have a little resistance at 81 and keep your stops in place. Can we repeat the levels in the chat? Um, for those of you who might have missed the levels, we're going to repeat the levels in the chat here. Again, they're there as a guide to the day. Nothing here is etched in stone. We can tweak those. We can adjust those. We can cancel some of them depending on the price action, depending on how the market reacts to around a certain level. And they're there as a guide. That's all we can say. Let's see here. We got the resistance around the 81, as you can see, as the bond market's kind of turning over here a little bit. You know, they are up. Well, they're up a lot, but could be put a little bit of pressure on in this market, I guess. Maybe if you were, maybe I don't know. I guess we're following what the bonds do these days, right? Seems like. Now we do have a number coming out here at the top of the hour in about 4 minutes or so. So keep that in mind if you're trading. We don't like to trade numbers when they're out. We also have Powell speaking at 9:15. So it's 8:55 right now. So we have this number at 9. Powell chit-chatting at 9:15, and when Powell chit-chats, anything can happen. The dollar strength has been causing turmoil, whatever that means, in the forex for a long time. So it's causing turmoil in the forex because everybody's believing that it can't keep going higher, and guess what? It keeps going higher, and so everybody's, you have that like a crazy effect where nobody thinks it's going to go higher. They all get short, and then when it keeps going higher, the shorts have to get out, makes it go higher and higher, right? So that's what turmoil, whatever turmoil, that kind of, we got turmoil here too in the S&Ps, that's for sure. But it is what it is. Again, the forex is definitely, in my mind, is always like run by the banks anyway. So we'll see what happens there. All right there. Sorry about that, Mauricio. I will give you the levels verbally then. We'll get the levels up in the chat in a little bit. Our pivot this morning is 36.73, 36.7. There you go. I just had to repeat myself one more time. There it is. Now everybody can see the levels. All right, we do have a number coming out here in a minute. So again, we don't like to have a trade when numbers are released. So if you have a position on or anything like that, we like to stay flat. And then we'll see what happens from there. They're up now. They should be up to everybody. Oh yeah, they are up to the panelists. Don, could you make it to everybody? Sorry about that. Thanks for Chad for letting me know. We'll fix that up right now. Sorry about that. There we go. Thank you. All right. Thanks for pointing that out to me. All right. We have a number coming out here. Again, we have a little resistance at the 81, but right now with this number, let's just kind of see what happens. All right. Numbers out. And again, yesterday's number with the housing number was a huge miss. I don't know if this is going to be the same. I expect this is pending home sales, so who knows? Somebody's chasing there. They got a 900 lot at 74 and a quarter. Okay, again, a little resistance around it. Again, if you're going to trade here, remember there's trading off of a number, so keep that in mind. Be careful. There's obviously some volatility here with when a number is being traded, as you can see. So keep that in mind if you're trading here. Much lower than expected, so it's a little bit, I guess, bullish because it's anti-inflationary, I guess. Again, be careful here trading this stuff. Again, there's a reason why we don't trade a number. Here's a perfect reason for it. But again, maybe you did jump in above the level here. Maybe you got in a little bit better than that because of the pop above it. And maybe you're taking advantage of this little rotation here against it. They're expecting, as you can see here, minus 0.9 came out of minus 0.2. So all right, nice rotation. Hopefully you were able to not have your order in and maybe jump in there a little bit after. Got up to 86, and we warned you about the volatility. So maybe you adjusted, and if you did fantastic. All right. All right, nice little rotation here. They just had went up there for a minute and then decided, you know what, this is not for me. So let's rally this. Let's break it back. Coming right back down here to our blue band here. Maybe some of you jumped in there against it, or maybe you covered some of your shorts against it, one or the other. Either way, maybe you're taking advantage of this rotation against the blue band there. All right, so nice little opportunities here. Again, remember I said nothing's etched in stone, right? You have to understand the market dynamics at the moment and then adjust accordingly. And this was a perfect example of we had 81, but we said be careful here with the number. We got above it, they hit those stops above it, and then maybe you just jump in. Then when it stopped, because we did have that level up there, and the level was there was a reason they popped it right above it because of the number, and then they hit those stops, and then they nice rotation. If you did jump in, that's great. If you bought our blue band there at about the 67 area, you're doing okay on that too. Just a matter, again, you appreciate the volatility when it's there. You have to understand the volatility that sometimes you're going to get stopped out, but you're also going to appreciate the fact that the volatility is there because of the quick movements and the opportunities that do accompany those movements when they occur, especially when they go your way. It's just a nice little rotation. Yeah, you don't take too much risk on these, even though we're telling you to keep your stops in place. But if you get in at a nice entry point for the right reason, again, we do have reasons. We're not just jumping in because we're jumping in. There's a reason. Again, anything that I say or any reasons that you might want to trade this stuff, we do teach in our education course that we have. And the goal of the education course is to make sure that we find these opportunities on your own, to trade them, to understand why the levels would work, and then to try to maximize those profits according to your risk tolerance. All right. And everybody here has different risk tolerances. So now we are flat. Again, you could have maybe got short above, maybe you got long against our blue band, but right now we are flat. We're not taking the blue band second rotation back to it. I mean, it could work. If you're going to take it, just keep a semi tight stop, like maybe 3 points. That's a tight stop in this market, unfortunately. It is what it is, Yeah, the VIX is way up there, right? So that's why we're at 5 points here with our stops and our entry points there and targets, and we are getting them. So it's not like we're getting those price opportunities, but you have to understand the price action. You have to understand the volatility, and then obviously make adjustments. If you're going to keep your 2 points, it's not gonna do you any good. It's because the market is just volatility is just too great, unfortunately. But it will slow down apparently, at some point. Now we did not next on board here is Powell speaking in about at the 9:15. So about 10 minutes or 8 minutes. I don't know what they're gonna do. I don't know where he's speaking or what he's saying or what kind of speech he's giving, but he's talking, so who knows what's going to happen. Wyndham, as I'll take a phrase from one of the people who says in this room, the maestro starts talking. He's going to create some volatility. Fed is apparently succeeding in quashing major inflationary factors, surging home prices. Well, you mean their policy is working? You mean throwing us into a recession is working? Yeah, okay, that's good. The reality of it is that they just acted too late. That's all. Yeah, they just jumped on board a little bit too late. That's really the reality of the situation here. They should have been doing this a lot sooner when they were talking about transitory BS. That should have been their area to start raising slowly. But again, they just didn't believe it. I don't know what model they had or what I don't know what model they had to give them that transitory wording. But Powell's due to deliver opening remarks in a pre-recorded video. As you can see here at the Community Banking Research Conference in St. Louis. So I guess if his remarks are there, probably no, Chad, it was there, and if it was there initially the first time, and it did trade off of it really fast. It came all the way down to that 63 area or 64 area. When they saw that, when they went back up there again, it was gone. So it was no glitch. You can't put 700 in there and it'd be a glitch. No glitches here when you put those numbers on there. So he's giving his So maybe those remarks will be bullet pointed to the market when they when at 9:15. We'll see. Now, like I said, we are flat now, so got to be a little bit careful here as to. I mean, we went down and tested the 63 already, so we're not doing that. We tested the 52 already, so we're not doing that. Really, our next good support level is all the way down at 40 if we rotate back down. And right now we are flat. Now again, our upper level there at the 81, it was came out right when a number was released. So we said be careful there. Maybe you adjust it accordingly, and had a nice rotation off of it. We came right down to our blue band there and rotated off of that. And now we are kind of flat in addition to our other levels that we had on the downside that we reacted to initially. So we've had a good 4 or 5 trades already. Again, you don't have to take all of them. You have to find the ones that you obviously can visualize, that you understand why you're taking them, and then take them accordingly. I'm just saying, putting out there some of uh, the opportunities that were out there for us. Again, that whatever you take, you have to make sure you keep your stops in place. All right. All right. So we've been moving around, but again, we've been, being staying focused and waiting for opportunities. All right. Well, things have settled down here a little bit. They got themselves. There's a big range, right? They got down here to 50, the 59 area, and pop back up. So again, be patient and wait. We've had a lot of action this morning, a lot of opportunities. Our levels have worked nicely for us. We warned you against the 81 only because there was a number coming out at the time. So hopefully you made a little bit of an adjustment there once they hit those stops above it. Maybe you jumped in there. Those stops above it created the opportunity, actually. So that's what we are kind of waiting for. We wait for those stops to get triggered, and then you can see what happened after that. They completely fell out of bed after that. So it helped that the number created the ability to hit those stops, and then that's how you can take advantage of a number, even though your level is close by. So and that's what happens there. And is it always going to happen that way? I don't know. No idea. Right? It just so happened today that that's what happened. Right? So, uh, but the one thing is certain is that uh, we we don't like to trade that number initially, and then we'll see what happens once it's. I mean, the only reason that we even got in was because we had that 81 area, and we liked it, and those stops got hit, and then hopefully we were able to jump in after that. If you didn't, that's fine. That's okay. Then there was another rotation down to down to the our pivot there. No, our blue band, and had a nice pop back above that. So maybe you did that. And then right now we said we are flat, and we just kind of we'll wait for another opportunity here. Upside resistance is all the way up at the 90 area. Downside support right now is down really at 40. In the middle here, I know that's a big range. We've had those opportunities. It's trading both sides of our blue band. Kind of tough to get too excited about that. This is just chopping around in this bigger range here. So you'd be guessing as to where it's going to go, where it's going to stop, where it's going to rotate. So we don't like to guess. Consequently, we just take our time here and wait for something to get triggered for us. And that's why we also focus more on the morning hours to give us those opportunities for us to trade. And then after that, I mean, we our levels are there for us all day long. That's for sure. Sometimes we could run through them all, and we have to add some more to them. And sometimes we just kind of just use them as they come along. But the afternoon trade is definitely different than the morning trade. I think you get more ebbs and flows in the morning, gives us a better opportunity. Not all the time, but at least most of the time. And like I keep saying, not here. Everything here is not etched in stone. Even though I say that we have better opportunities in the morning, most of the time. Right? Not every day, but most of the time, the opportunities are there for us, especially with the methodology that we employ to give us those opportunities to scalp the market. And if anybody has any questions, again, feel free to ask in the chat. We don't mind questions. They're good. All right, we're just kind of hanging here, coming back up here to our pivot at the 73. Again, we're neutral here. Definitely don't have any opinion right now. Obviously, it's our pivot, so and it's trading both sides of it. So very, very kind of quiet. Um, it, some of the volatility has been taken out of the market, especially since we're trading on both sides of our blue band, both sides of our pivot here. So kind of be patient here and see what happens. Again, the 81 level already got triggered, and you can see they popped it all the way up to 86. So now we're looking at the 90 area as our next level of resistance. All right, we continue to uptick here a little bit, coming up here to the upper end of this range. Again, if you're gonna, again, we already traded up here already, so it's kind of hard to say that the market is gonna stop up here. Not really. We don't have anything till till 90. So if it does stop here, happen to stop at 81 or 86, again, if you are scalping it and you're very, very you're risk averse, you're not taking the trades. Okay. If you're not, then, if you're looking for quick scalps, maybe 2 points, 2 point stops, really quick in and out, fine. If not, if you're happy with what you're up so far, then just kind of wait and look for the 90 area. Big order there, 500 lot right there at 85, as you can see, some of you, and it's gone. So somebody was toying with the idea. All right, we're up here at the highs. We're looking at the 90 area as our next level of resistance. We continue to uptick here, getting right up here to that 86. Again, if you're gonna, maybe if you're very aggressive, you're taking this 86 again. If you're very aggressive, just retesting that little spike. If you are aggressive, again, you're looking for a quick rotation here. All right. You know, if you did take it right around there, got right up to 86. Again, not for everyone. And there was a reason there that you could have taken that 86 on one time. Again, like I said earlier, there were a couple of reasons why you take the 81 before, now here to 86. And you got a nice quick rotation. Again, you're scalping very, very quickly and a tighter stops if you did take it. And now we're looking at above really nothing until 90. All right, now we continue to uptick here. Going right up here to the 90 area. Nope. Okay. Working at 90 area. Quick little drop there. Again, you see how fast the markets are moving. You almost have to have orders in place, both the exit orders and your entry orders to take your profits along the way, you know. So you're placing an order, and when you get that little flush down there, get you, yeah, if you had an order in there within that range, hopefully get you filled, because it just happens really. If you can't react to it, it's impossible, right? So, okay. Again, here, if you didn't get out already, you're giving a chance here to scratch some of them. If you took the upper end of the entry point there, it's giving you a little bit of a profit. Again, we're not going to like every trade. Not every trade's going to be maxed out on your profit target, especially if you don't like the price action. But definitely giving a reason to lighten the load a little bit if you don't like the price action, to take a little bit of a profit, to manage those trades. Sometimes you have to work the trade a little bit, right? Or sometimes it just filled you on the upside and you take what it gives you. Okay. All right. A nice little, just had to mess with you just a little bit up there. As you can tell, the bond market on their highs as well. So it seems like we are kind of doing what the bond market's doing. All right, nice rotation there against the 90 area. Got up to 2.5. Maybe you got into the top end as well. Top end of your entry point against the 90. If you didn't, that's fine too. Got up to 90, then came off of it a little bit. Then on that back rotation up to it, maybe you got filled on the upper end there. And then now, since we were on the same bar, and now we're just kind of hanging up here, trying to see what we want to do. Again, if you have any Anything left over? Again, sometimes we have to work these trades a little bit. Sometimes it's easy. Sometimes you got to work them. Yeah, you gotta love these some of these business things that come out and say, "Oh, the stock market's lost $9 trillion of American wealth since the market broke," but they don't tell you how much wealth was gained when the market was rallying. It's just they kind of make sense, right? To me, it doesn't make sense, but hey, they just like to scare people. All right, I mean, oh, $9 trillion lost since the market high. Okay, how about till the market got up there? How much more gain was there? Don't talk about that. I guess it's supposed to happen. So, all right. Again, we work in this 90 area if you haven't gotten out already. It's just kind of hanging here for you. Next level above we have is up at the 3701 area. Again, if anybody has any questions, feel free to ask. We've gone through a lot of these guys who are chit-chatting. We do have one at 10 o'clock. Bowman is speech. Obviously, Powell is talking. But if you're watching the bond market there, we're kind of doing what the bond market's doing, kind of, at least for the time being. Don't just, you know, focus that as a guide only because it's not what we, sometimes it's a little closer to see, but you can kind of see the same pattern in the 30-year as we see in our market. Let's see if I expand this a little bit and I do this. I kind of see the same. Doesn't it look like a bond market right here on the left? All right. Kind of looks the same. Let's move this down here a little bit. I think we can put that right over the bond market. It kind of fit perfectly, except we have a little bit more volatility once the market opened up. All right. Kind of looks the same. Now I'll change it back to not the same. But looks like bonds and equities definitely moving in the same direction. It's almost the same time. Next level of resistance we have is up at the 3701 area. Okay, market continues to uptick here a little bit. Looking at the 3701 area next, there's some good resistance. And if anybody has any questions, feel free to ask in the chat. We don't mind questions. All right, we got up to 98. Came off here a little bit. We're looking at the 01 area. Again, if anybody has any questions, feel free to ask. We talked about the people who are going to be talking already. Right now, we got support around the 74 area. $500 there at 90, and another 300 at 91. Somebody has got a little package to unload. Volume's pretty good though, that I have to admit. I remember we do have Fed Speaks today. We got another one at 10, another one later at 1. Auction results with 7-year notes at 12. So we've had a very busy morning with far as fundamentals are concerned. All right. Again, very, very choppy. As you can see, they got drifted quickly down to the 87 area, kind of flying right back up. So stay focused and kind of just keep your stops in place. Our levels have worked very nicely for us this morning. Okay, very choppy here. So be patient. Definitely wait for opportunities. Okay, now we continue to uptick, looking at the 3701 area. All right, if you took the 99, you're getting a little bit of a rotation here off of that. Was there a reason to take the 99? Again, if you're scaling in, we've definitely been kind of looking at 2 points above and below a level, only because volatility is there for that. Right, coming right up here to the 01 area now. Work in this 01 area. All right, Chad. Nothing wrong with that. Sometimes that's a good day. And bonds on their highs, and so are the S&Ps. Some of my best days have been scratches. All right, nice rotation there against our O1 area. All right, again, getting a nice little, took a little bit of heat there, not much, only got up to 2.5 and then rotated off. Again, we've been telling you to be a little bit patient here and wait for opportunities. This is a perfect example. Yeah, we're looking at 90 when we were down at the 70 area, and then we got up there, and then now we're coming up here to these upper levels. Don, let me give you some more levels here above. I don't know. I usually put the kibosh on the market when I give you more levels one way or the other. So let's give you more levels anyway. Above O1, we got 12, and then 25, and then 34, and then 42. Those are the levels above the 25 that we gave earlier. 34 and then 42. All right, nice rotation there against our O1 area. Again, took a very little amount of heat there, but you're getting a nice rotation here against it. Again, this is where you can take more than 4 or 5 points out of these trades, and they're giving you just about 5, 6 points right in here. If you still want to stay short, have a trailing stop with some other contracts that you have left over. There you go. Thank you. There's the additional levels. Again, we gave out those levels for those of you who might have just come in a little bit late at the beginning of the day when the market opened up. And now we're just trading them. Our downside support levels worked there, a couple of them. I think the 50, we got down to 50, was it 50? Was it 52 exactly? That was this morning, right? No, we got down to, right here, 57. And then we got down to 52 area. I think we did. I'm not sure. I can't remember anymore. Let me see. 840. Yeah, we did. For sure. Oh, that was in the morning. Yeah, we were really moving around that first bar. Yeah. That's right. Yeah. All right, nice rotation there against our O1 area there. Again, if you're trading it, you have a trailing stop, you can take a little bit more out of it, but as you can see, they disappear. Profits disappear fast in this market. You got to have your orders kind of in place where you're getting out. For the time being, done.
Hey, quick shout out, welcome to Vanessa S. Hey, Vanessa, welcome aboard. Use the chat feed to respond. Let us know that you hear my voice and see our charts. That's for Vanessa S. Hey, Vanessa, appreciate it. I just lowered your hand, but thank you for the high sign that you hear us. Saul's coming in and out. This is Trade Along Live with Saul, focused on the S&P 500 E-mini. We're here every trading day, slugging it out. Do the trading, let us know. If you need trading software, let us know. This is an educational-only trade-along format. It's very well received. We've got a great group of traders in here. Appreciate you all being here. Don just posted the levels for today. And again, Sal's popping in and out. Thanks, Don. So check your chat area. That's a repost from this morning at 9:30.
All right. Again, those levels, as you can see, have worked very nicely for us this morning. If anybody has any questions, feel free to ask in the chat. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels you just seen there. And we like to average about 4 to 5 trades a day. I think we've done well over that today, as the market gets some legs here to the upside, give us some opportunities to scalp the market again based on the levels that we just gave out. Well, we gave out this morning, I should say. If anybody has any questions in regards to any of the things that I've been saying, or concepts or ideas or trades that I've been talking about, let me know. We'll put it in the chat. We will try to explain it to you as best as we could. Again, anything I say is taught in our education course that we offer. Our education course is done in this venue. We're using live charts, and also the real time. We do it in the late afternoon, versus, so we can use the whatever, talk about the day's activities during the day, and then these real charts in the afternoon to give us to teach the concepts and ideas that we have. All right, market kind of turn over here a little bit. Got support back around the 78 area. Can you explain more about the entry point? Sure. Well, first of all, you can see our levels there. Resistance, as you can see on the upside there, we had a 3701, just to give you an example. We would have our orders to sell because it's a resistance level at the 3701 area. If you're just taking that level, if you're just trading smaller and just looking at levels, we're just looking at the 3701 to get short. We have a 5-point stop around that, at least today we do. That changes with the volatility, 4 to 5 points, somewhere in that range. And so we are looking, we got short around that level. The market went up to 2.5 and then rotated off. So we would be short and then take some profits against that at one level. Now, if you're trading multiple contracts, maybe you're peeling some profits off. You're taking a couple contracts off here, a couple contracts off there, and then are managing to take more than 4 or 5 points on some of these trades because of the entry point is pretty much riskless, and the rotation off of that level worked very nicely. So sometimes it gives us those opportunities where we can manage the trade, where you can take if you're trading multiple contracts, that's what I'm talking about. And if you're not trading multiple contracts, you're just looking to take 4 or 5 points on a trade and then keep your stop in place and then move on to the next opportunity. So that's what we do with those levels. And again, there's in addition to those levels, there's also price action opportunities that occur. And those are there as well. And the combination of both the price action opportunities plus the levels that we just gave out that you see gives us our entry points into trading the market, getting long or getting short, and then trying to take advantage of those inflection points that we think the market will give us. Those inflection points gets us to either get long or short those markets. On the downside, we got long the 52 area, which is down here, which is the low of the morning this morning, and so that gave us a nice opportunity there to jump in and get long against that our level down there. So that's what we do here on an everyday basis. We're just trying to take advantage of ebbs and flows of the market. And anything I say, whether I give out those levels that we see or the price action opportunities, we do have an education course that kind of explains those things of where those levels are and shows you how to get into them, how to manage those trades, understand your risk tolerance, and to maximize those risk tolerance according to what the market volatility is. So that's what we try to do here on an everyday basis as we're trading mini S&Ps here. Oh, you mean 36, right? All right, we got look at that. Nice. This is very, very choppy little trade here. We got down quickly, rotated off of that. Got down to 89 and change there, and quickly came back up. So that's a pretty big move there. We had support. We said around 77 to 80 area. Got down to 88, 87, and then popped back up. And now our next level of resistance we have is up at the 12 area. That's the next level of resistance that we are going to be looking at. Again, it's at least the markets are moving around for us, giving us opportunity, but we just have to be patient. We've had ample opportunities that we like to average. Is the key word is average, 4 to 5 trades a day. I think we are definitely beyond that this morning. And we also focus more on the morning hours to give us those opportunities. We feel that those are they do give us good ebbs and flows. I think the dynamics of the morning bode well to what we are trying to do in regards to our trading. I think there's more traders that there's more volatility in those hours. The late afternoon, late morning, late afternoon, start getting into more one-way trade. So it becomes a little bit more, doesn't bode well to what we are trying to do. But hey, it is what it is. Again, if we can have 4 or 5 trades a day, we don't like to give too much money to those broker firms, brokerage houses, because they're no fun. All right, very, very choppy, as you can see, whipping around. They got up to the 01, came by flying off of it. So be patient. Bonds here are up on their highs, so that kind of could be just kind of helping us here a little bit. Next level of resistance we have is up at the 12 area. Support right now would be around the 80 area. And kind of in the middle here, it's kind of just kind of doing nothing. All right, so let's be patient. All right, so it's going to get a little bit choppy again. We also wait for opportunities. Like I said, we average 4 to 5 trades. I think we've gotten way above that already this morning. So we're just kind of right now, just kind of being patient and kind of just waiting for things to develop. Again, we've had a lot of opportunities this morning. So anything we're going to take going forward is just kind of, you have to pick your spots and be patient and wait for them Our resistance level on the upside is going to be the 12 area. Right now, support is at 70, 80. Kind of in the middle here. It could do whatever. It really could do anything. So we're not really going to attempt here, so especially since we've had a nice opportunities this morning, and we don't have to really go out there and keep chopping away here for no reason. Just waiting for an area to get triggered is what we try to do anyway. And for the time being, that's what we're going to just be patient here and wait for either the 12 area on the upside and or at least for the time being, the 80 area on the downside. That could change as well, right? I think if we get below 75, the market could go down to continue to downtick here a little bit. We get below 65, we could go retest the lows on the downside. Again, if anybody has any questions, good time to ask. All right. We might just be kind of flagging up here a little bit. Support at 80 area. Next level resistance up at 12. We gave you downside kind of breakthrough areas where if we get below 75, we might rotate down. And if we get below the 65, I think we might go retest the lows on the downside. All right. Again, questions right now? Otherwise, we're going to take a little bit of a break, get back in a bit, and hopefully you all had a good morning. If not, if you got your money back, at least that's good too, right? Nothing wrong with that either. Like I said before, some of my best days I've ever had was scratching. If I had a bad morning, for whatever reason, I mean, sometimes we could have everything like clicks our way, and we just miss it by a little bit, or we do crazy things, and it happens, But sometimes we get our money back. We feel good about that, so nothing wrong with that at all. All right, get back here in a bit.